Everyone thought paper money would cure France's debt. They were catastrophically wrong. In 1716, a Scottish gambler and financier named John Law arrived in Paris. France, reeling from King Louis Roman XIV endless wars, was bankrupt. Law proposed a radical solution, a national bank issuing paper money backed by the crown, replacing metallic currency. This wasn't merely an economic theory, it was a desperate gamble to save a nation. Law's first venture, the Banque Générale, successfully issued paper notes that were accepted for taxes. This initial success, though modest, built trust. Then came the audacious leap. The Mississippi Company granted exclusive trading rights with France's vast Louisiana territory in North America. The vision was of unimaginable riches from colonial trade, a promise that ignited public imagination. To fund this grand enterprise, the company issued shares. Law encouraged speculation, lending money for people to buy shares. The price began to soar, fueled by glowing reports of Louisiana's potential: gold, silver, tobacco. Parisians, from nobles to servants, clamored to acquire shares, seeing their neighbors grow wealthy overnight. It was a fever gripping the city. The price of Mississippi Company shares skyrocketed, from 500 livres to over 10,000 livres in a little over a year. People mortgaged everything, sold their assets, and borrowed heavily to participate. The Rue Quincampoix, where shares were traded, became a chaotic scene of frenzied buying and selling. It was a spectacle of wealth creation, seemingly from nothing. Law's bank, now renamed the Banque Royale, became the central bank. It continued to print more paper money, supposedly backed by the Mississippi Company's ever-increasing share value. This created a dangerous feedback loop. More paper money chased fewer real assets, inflating prices across the economy. The intrinsic value of the shares was increasingly detached from reality. By mid-1720, the cracks began to show. Some astute investors started selling their shares, converting their paper profits into hard gold and silver. This outflow of precious metals began to destabilize the system. Law tried desperate measures, including decrees forbidding the use of gold and silver, but confidence was eroding rapidly. The inevitable collapse arrived swiftly. The share price plummeted, and the paper money, once so highly valued, became worthless. Fortunes were wiped out overnight. The Rue Quincampoix, once a symbol of wild prosperity, became a scene of despair and riot. Law himself fled France, his grand experiment in finance ending in utter ruin and public outrage. The Mississippi Company scheme left France with a profound distrust of paper money and central banks for decades. It was a stark lesson in the dangers of speculative bubbles and the fragility of financial systems built on unbacked promises. The echoes of its collapse resonated through the subsequent centuries, shaping monetary policy and public perception. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe if you're fascinated by the historical financial manias and bubbles that shaped our world. This video is for educational and informational purposes only and is not financial advice. Always do your own research.